Hi, it's Brad from Ocean Consulting Services, and in this video we'll be discussing installment agreements, what they are, and how do they work. So installment agreements, what are they? How do they work? It's basically a program offered by the IRS to allow taxpayers to pay their debts over time, of course with interest. It allows for the collection activities to stop, so the IRS will not levy your assets, it won't garnish your wages, and it allows it to be paid over time. Importantly, as I mentioned, interest and penalties continue to accrue on anything you owe, but it does stop the collection activities and allow you to satisfy your tax debts. So the first topic that comes up with clients when I discuss installment agreements is, why can't I just compromise my debt? And it's true, the IRS offers a program called an offer and compromise where they'll actually reduce the amount of tax that you owe and allow you to pay it over time. So the obvious question is, why not apply for an offer and compromise? Well, the short answer is the IRS thinks that based on your financial information, they can collect the entire debt. And they won't, if they believe that, if the formula which they use called reasonable collection potential, if they think you can sell assets and generate some future income and pay off your debts in full, they won't allow you to compromise your debt. So the next best thing is an installment agreement. As I mentioned, the threshold question for the IRS is what they call the reasonable collection potential. Do they think using their formulas, which are a mix of fair market value, quick sale values, IRS standard allowances, and actual expenses, do they think you could sell assets and generate income, pay the tax debt off before the statute of limitation expires? And if the answer to that is yes, they won't allow you to do an offer and compromise, so the installment agreement is the next best thing. So installment agreements come in four different types. There are what they call automatic installment agreements. There are streamlined installment agreements, there are regular installment agreements, and there are partial pay installment agreements. We'll talk about each of those. So what's an automatic agreement? This is the most simple agreement. It's for people who owe less than $10,000. It's for situations where in the last 5 years you have not had a tax debt to the IRS and you haven't had another installment agreement. It can be done online. It is required to be paid back within 3 years, and there is a user fee, as there are with all the installment agreements, but again, as the name implies, automatic, very simple. You can apply online and make payments over time. What's the next type? Streamlined. For this one, you have to owe less than $50,000, and again, you can't have a tax debt that arose in the last 5 years, and you can't have entered into another installment agreement in the past 5 years. This one allows you to pay it over a period of time not to exceed 6 years, and again, can be filed online, relatively straightforward. Now, what's a regular agreement? Now, this is a little more complex. It's for people typically who owe more than $50,000 or need more than 6 years to pay off their taxes. Unlike the first two examples, this one you will have to provide financial information to the IRS about your assets and about your future income and about your expenses. It's submitted via what they call a collection information statement. Importantly, when you consider this as an option, realize that the collection information statement will ask you for your actual expenses, but the IRS for a number of categories has what they call allowable expenses. So even if your housing cost is X, the IRS may only allow you Y for expenses. So a lot of people say, well, I don't have any income after I pay my expenses, but according to the IRS formula, you do. Now, there are a couple of exceptions to these allowable type expenses. One's called the 6-year rule. That rule says that if you can pay your taxes within 6 years, they'll let you use the actual expenses as opposed to the allowable ones. Second rule is called a 1-year rule, and in this situation, if you show that you cannot pay off your taxes within 6 years using actual expenses, they'll allow you to use your actual expenses for the first year basically with a view towards adjusting your expenses, then going back up to what the IRS allows you to use as allowable expenses. The next type of agreement is called a partial pay agreement. This is an agreement like a regular pay where you determine how much can be paid each month. However, the dollar amount is not enough to pay your tax over the period of time before the statute of limitation expires. So the IRS will allow you to make the regular payment that you determined, then they'll revisit it in 18 months. So in summary, for many taxpayers, an installment agreement is a very efficient means to settle their tax debts, to stop the collections, to stop the IRS from the notices, to stop them from trying to garnish your wages or seize your assets. It allows for payment over time. Of course, there is a cost. There's an initial upfront cost, plus interest and penalties to continue to accrue. But again, it's a means of paying your tax debt over time. Many taxpayers utilize this. The IRS really just wants to get you into their system, wants you to start paying off your tax debt. As I mentioned before, the concept of a reasonable collection potential should be looked at in most circumstances. It's sort of the starting point whenever I look at a situation where someone has a tax debt, because it really tells me up front, is this situation potentially an offer and compromise candidate? Can the tax debt itself be compromised? Or if it can't be compromised, what's a monthly payment that the IRS would allow? And again, for many situations, the IRS will look at these, reasonable collection potential. They'll clearly look at the RCP if you try to enter into an offer and compromise, but it also may be relevant in determining an installment agreement amount. Hi, that's it for this topic. Please stay tuned to this channel for additional information as we discuss other topics related to IRS tax collections. And feel free to reach out to us if you have any comments, questions, or need assistance. Thanks. Bye.